What's going on, traders? This is Jack with the Trading Tribe, and today we are back at it with another trading video. Today's actually going to be a little bit different, though. We're going to go through how to actually make money trading options in the market. And this is something I've talked a little bit about on the channel so far on how to make money trading options, but it has not been a focal point since I typically trade futures mostly. So most of my videos on the channel have revolved around futures. But recently, I've wanted to actually show this side of my trading and show how you can make money expressing trades in the form of options, and really what are some of the benefits and why do I see a lot of value in actually doing some of these options trade month to month. And today I actually took an options trade, so we're going to take a look at this live example on Microsoft, but you can extrapolate this and use this all throughout the different markets, right, with your different strategies as well. And on my broker, we're going to go through how to do all of this on ThinkorSwim, but this does differ depending on the actual broker of choice. If you do like this content, feel free to like and subscribe to the channel, as we'll have a lot more options related videos if this is something my audience is interested in. And with that, we can get started. And in this case, right, I was looking at Microsoft, and Microsoft just had a really strong earnings. So from a fundamental standpoint, right, Microsoft is looking really solid. It's actually oversold as well. So we'll notice it's had a pretty nice pullback on the 4-hour chart. If we zoom out, right, that was early August or mid-August, if you will, where we're looking that we've kind of doubled bottomed right around 315. And so my idea is really that we're going to make our way back to those highs around 366. And what I'll typically do with these options trades are I'll play them somewhere in the middle here. So if we zoom into the last few weeks on Microsoft, right, we can see Microsoft is really in kind of a channel between 315 and 345-ish, where we'll come kind of test these support levels and then we'll move and rally up to the resistance levels, but we're kind of staying within this range. But we did just break out right after that earnings announcement for a push higher to like 352. In this instance, right, we've actually pulled back and held the moving average. And so this is kind of what got me interested in the trade initially. And I wanted kind of a move above this 340 ceiling that we have marked on our chart. And in this case, right, this is actually a really good candidate for options trading because in order to trade Microsoft, right, you need $330 per share. So it's a pretty expensive instrument to trade versus options. You can express really the same trade with a lot less capital behind it. You can still get really good moves too, because for options, you're really controlling 100 shares of that underlying stock. And we'll kind of look at how the contract actually moves. But essentially what I did is I took an options trade called a call, where I bought a call for that 340 level. So I bought the 340 call for November 3rd. So the expiration is the end of this current week as of filming this video. I'll release it this week as well, just to make everything make a little bit more sense. But essentially, I am betting on the fact of Microsoft pushing up to that 340 level at least. And that is really where my strike price lies for my actual contract. So if we move over to the options chain for Microsoft, we'll kind of look at the option contract that I actually traded. So I'll open up this November 3rd panel, and this will pull in all of the different strikes. And we'll look at that 340 call. So we'll see the strike chain has all of the different prices. We are hoping Microsoft pushes up to 340. So we'll see the 340 option here. And the left-handed side is the call options. And this is essentially betting that the stock is going to go up by this date above this current price. And the nice thing about options is really your risk is built in. So we can see that this is trading right around $226 or $226 per contract. So the way these are priced is actually an option is traded based on this price here, but everything's multiplied by 100 because you're controlling 100 of that underlying stock. And what we can actually do is we can right click on this and copy this ticker. And so it's going to work a little bit different than the ticker for Microsoft, but we can actually grab this contract to actually review what it has done in the past. And I'll actually make two screens here just so we can do a side by side. And I'm going to drop that in. Now we're actually looking at that call option that I bought, but we're looking at it on the right-hand side, and then we're looking at Microsoft here on the left-hand side, and I'll make everything a 5-day chart. But if we notice, right, I actually got in today, so I'm going to actually show my trades just to show my fill here, and let's refresh this to see if that comes in. And my fill is still not coming in here, but in this instance, or there we go, now we can see it. We can see my fill here. So I got in this morning on the call option, and my call option got filled at 2.54. So again, that's that amount per contract. So it's basically $254 per contract. And what's nice about this again is you're building in the risk with the purchase. So the most this contract could lose is it could go to 0 if the price of Microsoft does not get and stay above that 340 level by November 3rd. Another really nice part about this is if we zoom out of the contract, right, the contract was purchased right in the mid twos, but we'll notice last week, right, when Microsoft made that really big move up to 351, this contract actually went all the way up to $10. So essentially I can, almost 4x my money on this contract if that exact same move does happen again, which happens to be really what we're playing here. So we're hoping Microsoft does essentially curl and make another higher high within the next few days, just like it did last week, kind of closing out with that really strong earnings announcement. So we've got some really nice fundamental news behind us. We've got a really nice technical chart. And then the actual contract I got in on has a max loss of $254, but it technically can go back up to the tens there. And if we sell a call option up at 10, we're essentially going to get $1,000 back. And so if we sold it for $254, we're making $750 essentially per contract. So really quickly, you can see that that's like a 3-to-1 if you're risking that entire contract in just a few days, right? In this case, I did play it a little bit riskier by picking that strike price and by picking that date expiration. So same week expirations are definitely a little bit riskier just because if it does not go up to 340 by Friday, right, this value will be worthless as the contract will not have any inherent value. Hopefully this helps though with really how options contracts work. We can put stop losses and limit orders just like we can on the equities and future side. So the actual execution of the actual trade itself is very similar. Managing risk can be a little bit trickier just because options move so much quicker. But this is an example of a current trade that I'm in on Microsoft with the 340 calls for this week. If you have any questions, feel free to leave a comment down below and like and subscribe to the channel for more content like this. Thanks, everybody.